According to supply managers in the 9 Mid-America states, how is the economy performing?
The overall index was at 55.4, and that's up from May's 54.3. 55.4 is in solid growth range. Anything above 50 is growth positive. This I'll call it solid growth range. It's still not as strong as we saw a year ago, but it's still pretty good. It's the 31st straight month that we've recorded a number, an index above growth neutral. And here I'll bring up a chart which compares the U.S. In red to Creighton's in blue there, and you see that Creighton's generally been, our survey of supply managers in the Mid-American region has generally been above the U.S. And later on this morning we'll see the U.S. number will be released. I expect it to be up slightly, still below our number, but still in growth range. Overall, the results indicate that manufacturing growth is a bit slower now than what we saw, say, 6 months or even a year ago.
What were the hiring trends in June?
Overall hiring for the manufacturing sector for June was up significantly. June number is 58.9, that's up from May's 52.2, which both numbers, of course, are above growth neutral. So that was very promising. When we look at the government numbers that have come out, overall number in the region is growing year over year about 0.7%. That's less than half of what the U.S. number is at 1.6%. Now when you look at the last 3 months annualized, the number is even lower for the Mid-American region, 0.3%, and even lower for the U.S. at 1.3%. So both the U.S. and the region employment growth is slowing down, and that's somewhat troubling, but that's what we're seeing, and some of that's related, of course, to being able to find and hire qualified workers, but of course there are impacts, negative impacts from floods and negative impacts from trade.
What impact have tariffs had?
Tariffs in this case restrict buying from abroad. A lot of our supply managers are finding it more expensive to buy from abroad. Likewise, selling into, say, Chinese markets where the Chinese have retaliated. So that's been a real challenge.
What inflation trends are you noticing?
Our number for the month of June was 59.1, above growth neutral, and a bit, I will call it modest inflation. That's down from May's 62.8. We're seeing that at the national level, so moderating inflationary pressures, and that's good news in the sense of the Federal Reserve is not going to be raising rates. In fact, when the Federal Reserve meets at the end of this month, July 30th and 31st, there is a very high probability they will be cutting interest rates because they feel that the inflation is moving toward the lower bounds of their target. They like to raise the inflation rate a bit and also, of course, stimulate the overall economy. And they might argue, there's some saying that inflation is too low. I'm not among those, but to give some comfort, I expect a rate cut certainly in July and maybe in September. If it's not in July, it'll be in September due to the lower inflationary pressures and due to a slowing economy that we're seeing.
What's the biggest economic challenge companies will face in the next 12 months?
The number one challenge over the next 12 months is finding and hiring qualified workers. Due to almost record low unemployment rates in most of the region, 40% of the supply managers indicated that was their number one challenge. Number two was 20%, half of that, and that was global economic slowdown. So there is a real concern that with the slowdown in the global economy, sales abroad will become more difficult for these manufacturing companies that we survey. The third economic challenge is the tariff and trade wars. 17.8% indicated that the tariffs and the trade wars were the biggest challenges that their company faced in the next 12 months.
What are some areas of risk that we need to monitor?
In my judgment, the biggest challenge faced by the Mid-America economy, and for that matter the U.S. economy, will be the trade situation with China. The trade agreements or lack of agreements was signaled this weekend with discussions between Xi Jinping, the president of China, and President Trump. We need to see an agreement there. That's certainly a high risk factor. If jobs report comes out this Friday, July the 5th, very important. Last month's was not good, 70,000 jobs. We need to see 125,000 or above and above. Now the problem, of course, is we've run out of workers. Wages come out this Friday also in that same report, very important number. They've been growing between 3.3 and 3.6% year over year. That's in the Goldilocks range. Above 4% would be too hot. The economy is getting a bit overheated, at least the Federal Reserve, and saying, well, maybe we won't reduce rates at the end of the month. Keep an eye on the Case-Shiller Home Price Index. Very important, coming out the last Tuesday of the month of July. Growth in prices for housing is flattening. The housing market is weakening, at least in metropolitan areas. And I think in our part of the nation, we're seeing somewhat weaker housing sector, very important number. Finally, of course, the biggie on July the 30th and 31st, the Federal Reserve Open Market Committee meets, and a positive would be a rate cut. 25 basis points, 1/4%, or even 0.5%, 50 basis points, that would be a positive signal. On the risk side, if they said, nope, it looks like we're going to keep rates the same or maybe even increase them, that would be a real hammer, and that's a negative hammer on the economy, and that's true for this part of the country. It'd be especially true for manufacturing, and we would see that. So those are the big risk factors. Those are the big factors that economic factors that we need to keep an eye on over the course of this month.